Hey guys, hey guys. Can everyone hear me? Awesome, awesome. I see your response, Ramona, Grigori. Awesome. Can you guys see me? It's a super, it's a super sunny day here in Singapore, man. It's hot. All right. Oh, cool, cool, cool. I see a lot of you guys. Why am I lucky, Ramona? Is it raining where you are? Oh yeah, it's raining. Yeah, Singapore now is super hot, right? Oh, it's raining in England. I heard it always rains in England. Where are you guys from? Where are you guys from? Where are you guys tuning in from, guys? Nice. We got guys from Sweden, Portugal, Sydney, Ghana, Indonesia, Germany, Slovenia, a lot of England. Ah, see, Gauri from Singapore. Got Macedonia, Denmark, Belgium. Guys, you're from everywhere, man. Right? Yeah, England's all fog and rain. Australia, Scotland, Australia again, Alan Rogers, Lancashire, cool. Sydney. Actually, quite a number of you guys from Australia, eh? Right? They call that uh, you guys use the word mate a lot there, right? Like good morning, mate. Yeah, Mongolia, Jamaica, cool. Yeah, I'm right, mate. Okay, cool, cool, nice. Now, oh, Buenos Dias. So, is that Brazil? France. Okay, cool guys, cool. Nice. Oh, Morocco. Oh, Morocco. Okay, cool guys. Thanks for tuning in again. Yeah, thanks for tuning again to another session. This time, right? It's not intro to forex. I think they they forgot to update the title here. It is actually price action, right? The agenda today is inside a price action trading strategies, right? We have people saying that they can't see the speaker, right? Can't see the speaker. Can you guys see me by any chance? All right, so everyone can see me. Awesome, right? So I think the marketing team might have missed. They did a great job creating the slides, but I think they might have forgotten to update the the date. But no problem because the content is correct, guys. You are here today, right? You are here today to see the what are our price action trading strategies, what are the best 1 2 3 single, double, and single, double, and triple kind of candlestick patterns, right? And we also look at how we can combine candlestick patterns with what we learned previously. Okay, so it'll be a pretty exciting session today, right? But before we begin, we always need to let standard disclaimer that this is an educational webinar. Nothing you hear or see today or should be construed as investment advice. Always do your own little due diligence before before you trade. Now, I like to see how many of you guys joined me previously in the previous webinar, right? I think we were looking a little bit at support and resistance, right? How many of you guys were here previously? Right, okay, I see Jonas did, Philippe, Samun, Simon, Gregor. Oh, quite a number of you guys did. You'll say, nope, you didn't. The first one, been great. Okay, quite a number of repeat visitors. That's awesome, right? We got Razvan says his first time, welcome, right? Okay, guys, if you missed it, right, if you missed it, there's actually a place that you can go, right? You can go to icmarkets.com, right? Head over to partnership more and you click webinars. Okay, you'll be able to watch the repeat broadcast of the webinars there, just that you don't get to you don't get an awesome session where you get to ask us questions, you get to practice things along the way. Things are always more fun when when we're doing it live. I can see I can see your responses, I can see I can answer your questions that you guys have, right? So yep, this is the price action webinar that we're having, right? We'll be putting up a couple of more webinars, right? The focus that we have is we're gonna dive really deep into teaching you guys the juicy stuff, right? Price action. I mean, the support and resistance with Fibonacci. There'll be oscillators. There'll be momentum. A little bit of Elliott wave in the future, correlation, right? And yeah, we'll be jumping into a lot of this awesome stuff, right? So be sure to check out. Be sure to register for webinars, right? Today we had over 2,400 registrants, right? And the funny thing is that at GoToWebinar, we can only allow 501 people in at a time. So if you want to be early, right? If you want to get a spot, tune in early, right? Because we are almost at max capacity already, right? And if you tune in late, you might not be able to, catch the webinar, right? So anyway, without further ado, introducing your hosts for today, right? That's me. That's Desmond Leong, right? I look a little bit older. I look a little bit older, a little bit wiser now, I hope, right? But basically, I run the award-winning research firm, Everest Fortune Group (EFG), and also the Forex Army, where we build a lot of cool indicators like price action indicators, trade managers. We build it there. Interested, you can swing by and check it out, right? But we're the finalists for 2019 and 2020 for best FX research and best equity research, right? We got a team of CFA, CMT, and CFT accredited traders. Our main business is really actually advising banks, hedge funds, and brokers on where the markets are heading, right? But we have a special collaboration with IC Markets, right, where we want to train you traders on how to trade the markets, and how to see the markets, like how institutional traders look at it, right? So it's going to be exciting time, right? The analysis that you see every day on the IC Markets blog, right? You can, if you tune in here, you head over to where is it? Yep, the technical analysis, right? We're the ones who post it every day, right? You can tune in, take a look. If you have questions on this, feel free to ask me anytime too. But okay, I can see people asking me about the whiskey, right? I see the whiskey, right? In fact, I got a couple more different drinks today, right? If you guys want to join me later, right? But anyway, yeah, this is your host for today, right? This is your host for today. That's me, right? And what I encourage you guys to do is that if you have questions, shoot them over straight away. I have another monitor. I have another page open here, just monitoring your questions coming through, right? And I'll do my best to answer them along the way, right? Because as you know, our webinars, they're so fast paced. Sometimes at the end of it, right, we don't even have enough time to take the questions, right? So ask them right away, right? So anyway, just want to let you know the agenda for today. Anatomy of a candlestick, our price action trading approach, single, double, triple candlestick patterns, which I like the most, and combining them with what I love the most. Okay. Now, if you guys are not able to hear me, right, I can see some people typing in that you guys can't hear my hear the audio. I would love to give you instructions now, but I just realized you can't hear my instructions anyway. So all the best. I have no idea, right? Yeah. Okay. Sound is okay from you guys. Awesome. So yes, Pavel, I can answer your questions. I will try my best to answer the questions at the end. Okay. Awesome sauce. Now let's begin, right? Anatomy of a candlestick, right? So just want to let you know that there are mainly two kinds of candlesticks that you should look at, right? A few of you guys are asking for my favorite kind of candlestick patterns, right? The kind of confirmations I look out for. If I look for confirmations, I will share with you all that in this session. Okay. Now, just to let everyone know the anatomy of a candlestick. All right. Whenever there's a bullish candlestick, all you need to know is that why I prefer candlestick instead of bar charts. Bar charts tend to look like this, right? Line charts are worse. So I got my handy dandy little what's this thing chart over here, right? So these are candlestick charts, right? Sometimes you see line charts, and line charts they don't just tell you the kind of useful information. They tell you a different kind of information, right? But now it's not as useful, right? These are candlestick charts. Of course, there are hollow candles are the same. There are Heiken-Aishi charts, which is a different interpretation of candlestick charts, right? And then there are the bar charts, right? Which honestly don't really tell you that much. It helps you understand the structure a little bit better, right? But everyone, like, the more or less the de facto standard now are candlestick charts. All right. So we got a question from Ritar saying, why does candlestick charts jump sometime? Right. I think when you say jump, you mean that there is actually a jump in, like, for example, here. There's a jump over here. Okay, so why candlestick charts jump sometime is because is usually over the weekend, right? So for forex, there is usually very little what we call gaps, right? And the reason for that is because the forex market is a 24-hour market. The only time these gaps happen is when the market is closed. So it's usually over the weekend. And even for forex, that rarely happens. So if you take a look here, so it's usually over the weekend. So in this case, right, if you look, this is on the 6th of March, and this is on the 9th of March, right? 6th of March, 9th of March. You can see it here below. So it is absolutely correct that it is over the weekend that happens. Usually, it happens a lot more on stocks too. So if you're looking at the Nasdaq, you can see that there's a lot of jumps. The reason for that is because even on a daily basis, right, there are jumps because the market is open for 8 hours and it's closed for other 16 hours. And when there are news events that happens while the market is closed, by the time the market opens, there's a big jump, right? So that's the reason why there's jump. If you compare it, right, so many jumps when it comes to stocks, but the moment you load a popular currency pair like euro dollar, right, there is almost no gaps, right? So that's one great thing about the forex market. Is super liquid, right? It's open 24 hours a day, 5 days a week, right? And that is why you can see very little big price gaps here. Okay, now like I said, if you have questions, ask them along the way. The things you need to know about a forex chart is that, if you see a bullish candle, right, the open price is always at the bottom. Open price is always at the bottom, right? The close price is always at the top, right? If you see price come all the way up here, that means that's the highest price actually went to, right? And it comes all the way down here, it is the lowest that it actually came to. Now, why we like candlestick charts is that it tells us a story, right? It really tells us a story. So let me kind of narrate to you, what kind of story we are seeing over here, right? So I'm going to erase all this, right? So the story of the candlestick. Whoops, yeah, the story of a candlestick here. Let me just draw story of a candlestick. Right, the bulls are open over here. Okay, the bulls open over here, right, and they are feeling strong. That's why it's called bullish candle, right? So they push price all the way up. They push price all the way up, all the way up, right? And they push price even beyond the close price. They push it all the way up until here, right? They push up all the way up to here, and this is where the bears actually came in, and they say, whoa, you're pushing it up way too much, right? We're gonna push it down a bit, and there's a big fight here that pushes price all the way down. So it pushes price all the way down, and depending on how the markets went first, right? It could push all the way down, all the way down, all the way down, and it could push it all the way down to here, right? This was where the bears came in. No, the bulls came in and said, okay, we're gonna push it back up. And there's, it's constantly fighting this way, and they push it back up until this level where it closed off. It closed off here. It opened here. This is the high, and this is the low. So that's the beauty of a candlestick chart. It tells you the fight that occurs. You see the fight that occurs, right, between the bulls and bears throughout the entire life of a candlestick. Right, Nicholas, I can see that you're saying that you can't see my screen, right? I think you need to toggle the view a bit because we're sharing both my screen and my camera. Good lord, I'm forgetting words these days, right? Both my screen and my camera. So yeah, you can be sure to toggle it around. You should be able to see me. All right. But anyway, okay, nice to see it. Okay. Now we got a question. It says there are no jumps in price at weekends. So Mike is asking, the jumps in price that I explained earlier, right? Jumps in price, usually for forex, if you're looking at the daily chart, right, or even any chart that's smaller than the 4 hour, right, than the 1 day chart. Usually the jumps occur over the weekend. Jumps occur when the market is closed. So for forex, the market is open, every day of the week until the weekend, right? The short part of the weekend is closed, and this is where crazy stuff can happen, and that causes the market to jump. But for stocks, it's slightly different, right? It's open for a day, right? Then it's closed for 16 hours, right? Then it's open for a day, then it's closed for 16 hours. So this part over here, the parts where it's closed, is where a lot of stuff can happen that cause price to kind of jump. Okay. Yes, and when a jump occurs, right? When a jump occurs, it can actually bypass the stop loss and take profit. And usually when it bypasses the stop loss or take profit, what will happen is that the broker will close it at the earliest instance, right? So imagine if you have a trade, right? If you have a trade, let's see, if you have a trade, where's the big jump I saw earlier, right? And a euro dollar, you rarely see the jumps. Like, let's just talk about Tesla. A trade like here, okay? So this was a big jump from here to here. So imagine your take profit was over here, right? So maybe you were buying, you bought over here, and you expect price to reach over here, this take profit level. Okay, the market closed, and when the market opened, it actually spiked all the way up to here, right? This will actually trigger your take profit, but you will not be close at this price. You'll be close at this price, right, at a higher price. So this actually benefits you. But if you were having a stop loss, the same thing will happen, right? So it's fair whether it's your take profit or a stop loss. If it's your stop loss, you will close out at a higher price too. So when it comes to forex, that's one of the reasons why people sometimes don't want to hold their positions over the weekend, right? Hold your positions over the weekend. Some big news event happens, right? And when the market comes, it shoots up or it shoots down, whether it's in your favor or not, right? That element of unpredictability, right, can cause you to make a lot of money and cause you to lose a lot of money, right? And that's one of the reasons for that, right? Yeah, this time frame, I'm using the daily time frame, right? Look at the 4 hour charts, you can see a lot of gaps too. Okay, now back to the anatomy of a candlestick. I hope this part explains to you guys enough on how a candlestick works, because what we're going to do next is called the price action trading approach. Now, how many of you guys actually use price action when it comes to trading? Can you give me a rough idea? We got Mario using, okay, we got quite a number of people saying that they do. Vic says never used it before, right? Always scalping with price action, nice, right? Wow, on the daily chart, yes, there's a correct. There are some ways to do this on the daily time frame, and you scale down to the smaller time frames, right? But it's nice to see quite a number of you guys actually using price action, right? Wow, it's quite a number of you guys, right? I'm just curious, when you guys trade, who are day traders here, and who are scalpers, and who are swing traders, right? If you can give me a better gauge, right? Okay, we got Chino's day trader, Richard, day trader, scalping, day trader, intraday. Wow, we got quite a number of day traders, a few swing traders. We got a couple of swing traders coming through, scalpers doing both. Okay, wow. Okay, a large number of you guys are day traders, and day traders and scalpers, right? A few of you guys do swing trading. Now, some people are asking what's the difference between day trading, scalping, and swing trading, right? For day trading, your trades, you open and close your trades within the day itself. For swing trading, you tend to sit down on the swing, right? And when you're swinging in the park, you take your trades, right? That's what swing trading is. I'm kidding. That's not swing trading, right? Swing trading means that your trades, you tend to hold your trades over a couple of days, right? So if day trading is like, hold it for a day, swing trading means, you hold it for a couple of days, 3 days, 4 days, hold it, more than one day. Scalping is when you get in and out of the market fast, right? You get in, you get out, right? Maybe within a couple of minutes, a couple of hours, right? So that's the difference, right? So now price action trading approach, right? There are two ways that you can use price action to trade, right? Thank you, Gary. That's very nice words. There are two ways that you can figure out. One is the reversal, right? So when with price action trading, you need to know one way is the reversal. One way is the breakout, meaning that price comes down and it breaks out. There are basically two kinds of styles when it comes to trading, right? You're just looking for the reversal, you're looking for the breakout. Right, the reversal can happen this way. The reversal can be a bearish reversal too. Same thing for breakout. It can be a bearish breakout where it breaks the support and it goes further down, and it can be a bullish breakout where it breaks past resistance and it goes all the way up. So just remember that when it comes to trading, it's really essentially just reversal or breakouts that you're playing, and from here we know, right, the different kind of price action setups, candlestick patterns, right, help us determine whether we should be playing a reversal or we should be playing a breakout, right? Yes, and there are fake reversals and there are fake breakouts, right? That acts an additional element of fun, lack of a better word, additional element of fun to it, right? So some people love to wait for the breakouts. So there are breakouts that go like that all the way through. There are breakouts that go like that and they go for the pullback and they come through. There are breakouts that come like that, right? I'm not sure you can see this, right? The webinar has reached the maximum number of attendees, right? Congratulations for you guys who are here, right? You guys have you guys are in here, and we have actually people trying to tune in now, and they don't have the chance to tune in, right? So yeah, congratulations on being here. How do I stop this stupid alert from showing? Okay, I've checked it off. Yeah, you guys are feeling special. Yeah, slow clap. Yep, slow clap. Awesome. Right. Yeah, it's awesome. It's nice too to have a full house, right? I know it's nice to have a full house. And IC Markets is one of the few brokers out there can fill a webinar, right, to the brim, right? Awesome stuff, awesome sauce. Okay, there are a few kinds of breakouts, right? There's one that goes all the way through. That's the one who it breaks out, you wait for the pullback before it comes out, and then there's a false there's a false reversals where it comes down, it bounces up, and it kind of goes through after that, right? So different kind of breakouts, different kind of reversals, they have different kind of strategies, right? And a lot of it, you realize, happens over here. It happens at the point of support, happens at the point of resistance, right? These are what we call inflection points, right? Well, my handwriting is amazing, right? Inflection points, right? Right. So yeah, it happens at these inflection points where key decisions are made. And how do you decide whether you're going to see a reversal? How do you decide whether you're going to see a breakout? Right? You need to be on the ground. You need to be where the action is, right? And that is why we call it price action, right? We're seeing, we cannot see price action, retrospectively, right? We kind of want to see it happen there and then, right? We want to see it happen there and then, right? As as things are happening, right? So in this case, right, how we decide that is based on candlestick patterns, right? So something like the reversal, something like the reversal, this is like a channel, right? And if you attended the previous webinar, we look for channel at least 3 touches. In this case, we got 1 touch, 2 touch, we got 3 touch, we got 4 touch. Over here is close to a 5th touch, a 6th touch at the top, right? So we're looking for price to kind of come down here before it bounces up, right? So this is a very simple example of a reversal, right? So we can see that price touch here, and you're always wondering, right? Okay, price has reached here. Is it finally going to break out of the channel, right? And to decide whether it's going to break out the channel or not, right? We need to see this is the price action, Right, this is the candlestick pattern. It's a three candlestick pattern called the morning star formation. Right, and a morning star formation usually has a high chance of a successful reversal. Right, so the key thing when it comes to trading, right, you don't just zoom in and look at candlestick patterns by themselves. If you trade candlestick patterns, price action patterns by itself, you have a lower probability of getting into so-called profitable setups, right? And the reason for that is because how when you create a jigsaw puzzle, right? um, it's better to kind of look at the entire picture first before you decide to how you want to build this jigsaw puzzle, right? If you only use one strategy when it comes to trading, right? Like, for example, if you only use price action and you're looking at this corner of the jigsaw puzzle, right? You can see there's this big jigsaw puzzle, right? And if you're only looking at one small little corner, right, you don't see the big picture, right? You don't see the big picture of the entire jigsaw puzzle, right? So when it comes to trading, it's not about just focusing on price action, which is just one small part of the puzzle. You need to focus on price action, right? You need to focus on oscillators. You need to focus on correlation. You need to focus on maybe momentum, trade management. You need to focus on Fibonacci. You need to focus on, you can put in Elliott wave in there. You can focus on so many different things, and focusing, combining different things together increases your probability of being correct, right? Each one increases your percentage of being correct just by a little bit more. So in this case, right, although we are employing price action, right, we also ensure that, in this case, there's a channel, right? Even as a channel, there's an ascending support, right? From here to here, there could be a nice Fibonacci retracement down to here. There could be a nice Fibonacci extension, from here, right? And all these things, right, it adds up to help you increase your probability of being right in a trade. Okay, now let me just go through some questions. So you got Waka's asking, what's the meaning of high probability, right? So different candlestick formations mean different things, right? Like I shared earlier, there are candlestick formations that tell you that a reversal might be happening. There might be candlestick formations that tell you that a breakout is happening. All right. Some there might be reversals, some there might be breakout, right? Bharati, I can see your questions, right? So don't worry, you're typing in the correct place, right? So Andy is asking, right, this kind of candlestick patterns, what's the best time frame to trade them on, right? Do you use the 5-minute chart, right? Do you use the 5-minute chart? Do you use the 10-minute chart, the 15-minute chart, right? Like, which chart is more effective, right? Now let me share with you guys that when it comes to candlestick formations, right, always remember, the higher the time frame, the more effective it is. All right, the higher the time frame, the more effective it is. All right, so for example, on euro dollar, if you're looking at the 1-minute time frame, right, this is where it is not so effective, right? The reason for that is because 1-minute time frame, there are a lot less people looking at the 1-minute time frame than there are people looking at the 4-hour time frame. Okay, let me repeat that, right? There are a lot less people looking at the 1-minute time frame than there is at the 4-hour time frame, right? So that's the important thing here, right? Price action works better on higher time frames, right? So you can see over here, this is something like a shooting star formation at the top, and it's a little bit of a tweezer top, a tweezer top kind of formation, right? Usually you can find it at big places, right? This is a nice bearish engulfing. This is a nice bullish engulfing, right? There are many different kind of candlestick formations, and we look through them together. But usually at the key reversals, you can find like nice little patterns. Okay. Now, we got Martin asking, you want to learn a little bit about the ABCD pattern. The ABCD pattern is essentially something like the A, B, C, all right, C, and then you take the Fibonacci extension. Oops, sorry. Oh shucks, let me change that back. Okay, like for example, the 100% extension here, right? 100% extension, the 78.6, the 76.4% extension, right? You can see price reacted very nicely from there. Actually, it is the 78.6 extension, right? I think TradingView got it wrong, but you can see how a very nice Fibonacci extension from here down to here, up to here, projecting downwards, right, can lead to a very nice reversal on a Fibonacci extension. So this is a variation of the ABCD kind of Fibonacci extensions, which yes, we will cover in the future. Okay, right, exciting stuff, right? Always know that I'm on this journey with you guys. I'll be letting you guys know that there's a lot of different ways that we can analyze the markets together, right? And increase our chances of picking the right setups to call the nice trades. Okay, now okay, so you can see the reversal happens very nicely here, right? I'm just highlighting this as a nice area to look out for, right? So if you look at this very closely, right? If you look at this very closely, right? Even though there is a nice candlestick reversal over here, there is actually one. Who can tell me roughly what is this candlestick pattern over here? These three candlesticks over here. Who can tell me what is the name of this candlestick pattern that occurs over here that led to the successful breakout, right? Led to the successful breakout. All right, we got people saying it's 3 green soldiers. We got people saying it's 3 American soldiers. We got people saying it's 3 Russians, right? No, we got some people say it's 3 crows. Yes, 3 white soldiers. 3 white soldiers, and that happens to be actually be one of my favorite patterns when it comes to calling a breakout. That's so the difference between 3 white soldiers and 3 crows is that 3 black crows, 3 black crows is a bearish kind of thing, price is going down. 3 white soldiers is a bullish thing, right, where price is going to break out. It's a bullish kind of formation. So it's the combination of price action. Yes, Andy is right. It's a stairway to heaven. You can call it too, right? So it depends whether you are long or short. If you're long, it's a stairways to heaven. If it's a short, you're short on this thing, you're a stairways to hell, right? Highway to hell, I mean, right? So you can see how in this case, right, it's both a combination of Morningstar reversal, Morningstar plus 3 white soldiers. 3 white soldiers, right, leading to a very nice reversal and pushing price all the way up. You combine that with a nice Fibonacci retracement, you combine that with a nice channel support, with ascending support, right, and you get a very high probability setup, right? We got people asking what's the best time frame for this formation. When it comes to price action, I usually prefer at least the 1 hour time frame, right? Anything less than 1 hour, it tends to have quite a little bit of noise. So you can definitely find setups on the 5 minutes, on the 15 minutes chart, right? But personally, right, I prefer the 1 hour chart. There's a lot less noise there, right? Now let's move on a little bit, right? And in this case, we can see that this is resistance, right? For those guys who attended my previous webinars, you can see that this is what we call an overlap resistance, right? A very strong resistance area. They were seeing like, okay, what must happen at this place to help us decide, if price is going to break through over here. And to that tune, we can see that, there you go. You guys guessed it. This is a nice, this is not only a nice 3 white soldiers, right? But it's actually, if I'm not wrong over here, there's like a gravestone doji or something. But what's more important is the 1, 2, 3 white soldier formation that takes it past this key level over here, right? So those people who are playing breakouts, how do you know if it's gonna be a fake breakout, right? How do you know if there's gonna be a fake breakout, right? Let me just erase my drawings over here, right? So how do you know if it's gonna be a fake breakout? You usually have to see what happens when price reaches a key level of resistance. So first is being able to identify the correct support and resistance, which we covered in our previous webinar. So in this case, we can see that, price actually couldn't close above this key level of resistance, right? So that is the first hint that price might not break through it, because this candle over here is very weak. This candle over here is very weak, right? And then it comes down, it tries to come up, it goes down, it tries to come up, there's a double tweezer top, it comes down. But the next time it comes up, right, it has a 3 white soldiers formation. That is one of the strongest breakout formations, the strongest breakout candlestick patterns, right, that can lead to price really skyrocketing, right? So of course we can see here, this is 3 white soldiers that we're looking at, and price, 1, 2, 3 really takes off from there. So it's not going to happen 100% of the time. I'm sorry, I'm losing my voice. I need to drink something. It's not going to happen 100% of the time, right? But this increases, once again, increases your probability of getting it correct. So we got people, Samun, asking what's the Tweezer candlestick pattern. I'll explain it later, but Tweezer candlestick pattern is called, it's like this. It's like a tweezer. It's either a tweezer top that happens at the top of a trend, or it is a tweezer bottom, right, which happens at the bottom of a trend, right? It comes down, and it's a very good sign that price might go up. Okay. Now, yes, we let's see. So no one knows for sure whether it will be a fake out, right? If I can tell you that I can predict the markets, right, I am lying. Okay, no one knows for sure whether it's going to be a breakout, because when you say you know for sure, and that's a very dangerous way of thinking about trading, right? Saying that there's a 0 or 100% probability, right? And when you think about trading as a 0 to 100% probability, you're thinking whether it's wrong or right, right? And that is where it's very dangerous, because when it comes to trading, right, it's always anywhere of a probability between 0 to 100%. Right? Am I 70% confident? Am I 50% confident? Am I 20% confident? Right? That's how trading is. It's all a law of probability and a law of large numbers. Right? You can never be 100% sure. Right? I can have every single element lining up very nicely. I can have 1, 2, 3 check boxes all looking very nice. Right? But then that does not mean price would work in my favor. Right? I can never be too sure, and that is where trade management comes in. Okay, so we got questions, right? Is it safer to trade breakouts or the retest of the breakout level, right? So it depends on what kind of breakout you're looking at, right? If you're looking at a breakout that happens like this, right, where you're seeing a very strong price action breakout, right, it is better in my opinion to play the breakout, right? But in another case where the breakout doesn't look that strong, right? In this case, like this pattern here, it is better to not play the breakout. You play the reversal, right? So you need to look at the different kind of patterns to tell you whether you want to play a breakout or you want to play a reversal. How do you decide that? It's very simple, right? That is where we go into our top 3 single, double, and triple candlestick patterns. Okay? Single, double, and triple candlestick patterns. Now, we got people asking, at what point exactly do you take the trade on breakout? And can you shortly sum up the breakout? Okay, we will look into that later. We'll look into that now, right? I will share with you what I can teach you from candlestick patterns, and I will share with you how I do it personally with charting. Okay. Now let's go on to the top 3 single candlestick patterns. Okay, one of my favorite ones, right? One of my favorite ones is the hammer candlestick pattern. So this looks like a hammer you knock people with. Okay, a hammer that you knock people with, right? So the hammer at the bottom of a trend is called a hammer. At the top of a trend, right? Even though it's the same hammer, it's called a hanging man, right? One you will notice is green in color, is a bullish candlestick. One is red in color, a bearish candlestick. Okay, now how many of you guys can tell me, should we wait for the confirmation candle or not? Do we wait for the confirmation candle? Do we not wait for the confirmation candle? Please type in your answers while I go get a quick drink. 1 second, be right back, guys. Okay, I'm back. I'm seeing people say wait for confirmation candle. Wait for the confirmation candle. Wait for confirmation candle. You should wait, but sometimes I go in the confirmation. No wait. Wow, so many of people are saying to wait for the confirmation candle. Okay, I'm eating a biscuit now. Give me a second. I skipped my lunch, so I'm real hungry. Okay, now here's the thing, right? Here's the thing. Let me resume my video, right? Right. There's a time to wait for the confirmation candle. It's a time not to wait for the confirmation candle, right? Personally, sometimes if you wait for a confirmation candle, it's a different kind of strategy, right? If you wait for a confirmation candle, it might be considered as a, for example, a shooting, evening star and a shooting star formation, right? Because by right, you don't need to wait for the confirmation candle, right? By right, you don't need to wait for confirmation candle, right? When it comes to trading, the hanging man pattern, right? Because the hanging man forms at the bottom of a downtrend. Now, there's no harm in waiting for a candlestick formation, and there is actually a way, right? There's actually a way where you can scale into the trade. So when maybe when if for those people who see the candlestick formation, you might want to enter into your trade 50%, right? And then if you see a nice confirmation candle, then you add in a second 50%. That is one way to trade both, right? So you average out your risk, because if a nice confirmation candle happens, right, the trade will have reversed very strongly in your favor already. Okay. Now, so I got guys asking me where I'm located. I'm located here in sunny island, Singapore, right? So it's freaking hot, man. I swear, I'm sweating right now. I have a fan that's blowing directly at me, right? I can see this. I'm not sure if you guys can see this little fan, right? I have it blowing directly at me, even though I'm in the office. It's so hot. Oh God. But okay, moving on, man. Moving on. Let's look at the inverted hammer and the shooting star, right? This is kind of like the opposite of a hammer, opposite of a hanging man, right? Thank you, Gary. I might go to the office one day, right? Now, like a inverted hammer, right? It's the same. You can see that if it happens at the bottom of a trend, it happens at the top of a trend. It means two different things. Bottom of a trend is like an inverted hammer. At the top of a trend, it becomes a shooting star, right? So important things to take note of, right? Important things to take note of, right? Antoine, I think that's how I pronounce your name, right? Antoine is asking, do you consider the volume underneath such candlestick pattern? When it comes to Forex, I do not consider volume, right? When it comes to Forex, right, some of you guys might know of this volume indicator, right? I don't consider for volume, and who can tell me why I consider or I don't consider volume? Share with me. Okay, right. A lot of you guys got it right. In Forex, you're only seeing the volume of a single broker of the transactions, right? In the stock market, you have you have a centralized exchange, so the volume is real, right? But even though IC Markets is like one of the biggest brokers out there, the volume it shows is still not it's still a small fraction of what the whole market has. So many times volume is not a good indicator when it comes to trading Forex, because you're only seeing the volume for the Forex itself. It's not a centralized exchange, right? So important things to take note of, right? That's one of the reasons why I stick out of volume when I'm trading Forex, right? Yes, that's correct. Forex is decentralized, right? So moving on from there, the last pattern I love is the dragonfly doji, right? And the gravestone doji, right? What the story that basically happens here is that price opens here, It goes all the way down, and it's like, haha, I'm going all the way down, I'm going to push price all the way down, right? But then the bulls take over and they push it all the way up and it lands over here. This is a very nice pattern of indecision, right? So you usually find it at the bottom of a downtrend, and it's a good sign that price might reverse. Same thing as a gravestone doji, you find it at the top of a trend, and it's a good sign that price might reverse from there, right? Okay, awesome. And I see that some of you guys are in Switzerland, right, Michael? Yeah, it's cold in. Uh, I guess you can only appreciate the heat when you experience the cold, right? So in Singapore, we are sunny all year round, so we hardly experience the heat, the cold. It's just damn hot, man. Right? Do I for the gravestone doji and the dragonfly doji, I do wait for the confirmation, right? I do wait for confirmation. Now, the top two double candlestick patterns, right? I'm being very mindful of time because by right, we are 45 minutes through our webinar already. We have maxed out attendance. You guys are super awesome, right? You're sticking with me through it all, right? And I want to be very mindful of time. I want to cover some important topics. My top two favorite candlestick patterns are the bullish engulfing and the bearish engulfing. Now, important thing about engulfing candles, right? The first candle needs to be big enough for it to be engulfed. What do I mean by that, right? What do I mean by that? Let's take a look at the chart here, right? And I'm going to zoom in. I'm going to zoom in on one particular, we're going to practice on something. Okay, we're going to practice on, let me pick an example for you. Let me pick an example, a good example for you. Just give me a second. Give me a second. Now, um, okay. This example here, is this an engulfing candle? Oh wow, I didn't know I drew stuff in such a curly manner. Right? Is this an engulfing candle? A bullish engulfing candle. So for you, those of you guys that saying, yeah, for those of you guys who say no, can you share with me why? Okay, guys, I got a few answers coming in. All right. So for engulfing candles, right? For engulfing candles, right? It's usually what you're looking for, and this is an important topic, right? What you're looking for is you're looking for it to engulf the entire candle, right? But because of the way forex works, right, where the market opens and the market closes, sometimes they're usually right at the same time. This small little wick at the bottom, you see, I can't really zoom in, right? Okay, I'm not sure if you can see this small little wick at the bottom over here. I'm going to use sorry, I'm going to use this pen over here, right? This small little wick over here, right? Sometimes it's a little bit too small, right? So it is actually fine that this candle doesn't cover it, right? Because it covers the most of the other candle over here. And even covers the wick at the top, right? So that's a good bullish engulfing candle. Now the problem with this bullish engulfing candle is that, right? I'm just gonna erase my drawings here, and which you guys mentioned is that it is way too small, right? This is a bad bullish engulfing candle because it's too small, right? When you're looking for engulfing candles, you want to see it being very big. Now another point, let's go with another example, right? Let's go with another example. Um, what about this candlestick here? Right, this particular candlestick, is it a nice bearish engulfing candle or is it not? For those that say no, can you let me know why? Nah, it doesn't. You don't need to care whether it's a downtrend or not, right? I like Earl's answer, right? I like Chino's answer, right? Now, the important thing about engulfing candle, right? The important thing about engulfing candle is that it takes two to clap. It takes the first candle, right? It takes the first candle and then the second candle, right? This can only be called a strong candle if its opponent was also strong. Do you know what I mean? Imagine like this is a big engulfing candle, but its opponent is nothing. Opponent is just a tiny, a tiny lightweight opponent, right? And because of that, it's not a big deal if you beat this opponent. But if you look at it in a case, right? If you look at it in a case where you look at it in a case where it's a big heavyweight, two heavyweights against each other, right? Maybe like this and this over here, although that's not the perfect engulfing candle, right? It's hard to find like a really good heavyweights lining up together, right? This and this would have been a nice bullish engulfing. I mean, it didn't work out very nice, but this was a big opponent, and this was, it was an equally big opponent, right? So with engulfing candles, you don't only want to look at the first candlestick, right? I mean, the engulfing candlestick, right? You kind of want to look at the first candlestick, make sure it's a sizable opponent that's against, right? And then you look at the second candlestick, right? And with engulfing candles, the weak, the better. Okay, the less weak you have, the better it is, right? Because it shows more confidence, right? It shows more confidence, and that you need to think about that, right? Because if a candlestick closes like this, right, it means that price was open, it pushed up all the way to the top, and price closed at the top. No chance at all for price to even go up and then reverse down. Like this is what the weak means. The weak means a weakness, right? That's not a. I didn't intend that pun, but it's quite cool, right? I'm gonna use it in my future webinars. Weak means weakness, right? So in this case, price went up and it went down. So if there's a weak, it means weakness. Okay, and yeah, same thing down here. So that as long as there's less of a weak, that shows there's more strength in a bullish engulfing or bearish engulfing candlestick, right? Nope. Grant is asking if we should ignore the wicks and just focus on the engulfing bodies. Nope, that's a big mistake, right? Always look at the wicks, right? So an example is here, right? I would not consider a so-called engulfing candle like this, right? Even though this is a nice engulfing candle that worked out, if you look strictly at the wicks, right? No, I mean if you look strictly at the body, this one was one body and this one's another body, right? But because there's such a long wick here, this is not considered a bullish engulfing candle, right? This is more of a big hammer, right? Or big, yeah, it's more of a big hammer kind of formation. So always remember that for engulfing, right, you need the body to at least be 80% of the entire candle. Rule of thumb, always 80% of the candle. Okay, right? Engulfing candle tells us that there is a very strong chance of price going upwards for bullish engulfing and downwards for bearish engulfing. Okay, so usually when you see engulfing candle, right, it is one of the best ways to see to look for reversals. Okay, what I mean by that is, let me just erase a little bit of my yep. So what you're looking for is you're looking for a bullish engulfing at the bottom of a trend, and when you see a bullish engulfing, you're looking for it to bounce. For a bearish engulfing, you're looking for it at the top of a trend. When it happens, it's a good sign that price is going to reverse from there. right? Kazarine, yes, this webinar is recorded. Now, the last one I'd like to look at is what we call the tweezer top and tweezer bottom, right? Really good candlestick reversal patterns, right? Yeah, really good candlestick reversal patterns, right? The tweezer bottoms are seen at the bottom of a trend, right? The story, so I always emphasize that the story that you are looking at, right? The story that you're looking at, right? Is that imagine price open here, it pushed all the way down, right? And it's like, okay, I'm going all the way down, right? But the bears come up a bit and say, whoa, 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 right? I don't think you're closing that low, right? Let's close over here. It opens next, and then the bears try to push it down again, like, hey, you're going down. But the bulls say, no, we're not allowing you to push us down. We push it up further and we close up here, right? The key thing about tweezer bottom is that the lows should be roughly at the same level. The low should be roughly at the same level. Why is roughly at the same level? It tells us that this particular level here is important because the bulls are below pushing it up, right? And so in this case, it closes at the, it closes above the open price, and that leaves us this really nice pattern called the tweezer bottom. Very strong sign of a bullish reversal. The same can happen for a tweezer top. Very strong sign of a bearish reversal, right? So we got Richard asking, do these patterns all apply at all time frames? Some better at the shorter, longer time frames, right? Rule of thumb is that generally technical analysis work better on higher time frames. The reason why it works better on higher time frames is because there's less noise. There's more people looking on the chart, right? If you look at the 1 minute chart, right? Okay, let's just take a little bit of a poll here. How many of you guys look at the 1 minute chart? Okay, let me just count. We got 1, we got 2, 3. Most of you guys, 4, 5. Nope, 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 not me. Okay, not me. No, never. 4, 5, 6, 7. Right. Okay, so not even your robots look at the 1 minute chart. That's funny, right? Okay, so we got about 10 people, maybe. Now, how many of you guys look at a 1 hour chart? Right? How many of you guys look at a 1 hour chart? Right? Okay, a lot of answers coming in, right? Me. I can see a lot of people say, I do. Yeah, some say yes, a 4 hour, 30-minute chart, right? So here's the interesting thing. So that's how technical analysis works, right? You might notice a tweezer bottom, right? You might notice a tweezer bottom on the 1 minute chart, but because there are so few people who trade the 1 minute chart, not many people who have seen it too. Not many people have the time to look at a 1 minute chart every day and trade. It's really intense, right? Not many people even have time to look at the 5 minute chart, right? Not many people have time to look at 5 minute chart. So the higher up you go, right, the more people look at 1 hour, right, compared to 5 minute. There's more people that look at the 4 hour that compared to the 1 hour, and there's more people that look at the daily chart than the 4 hour chart, right? But of course, sometimes it goes a little bit too far, where maybe for daily charts and weekly charts and monthly charts, right, they are good. They're not that good for technical analysis because it's not sensitive enough, right? And instead, the 1 hour and 4 hour charts tend to be the sweet spot when it comes to doing technical analysis. Okay, because most people look at it, and that's how technical analysis works, right? You need more people to look at a chart, for it to be for it to work. Now, I'm just going to touch quickly on triple candlestick patterns, right? Triple candlestick patterns, right? So what are the top 3 triple candlestick patterns we can look at? One is what I call the morning star, right? There's a bearish, there's a morning star and a bullish candle, right? You don't need to worry about the gaps over here, right? There's a gap over here, there's a gap over here, because in Forex, that's not possible, right? So morning star, evening star, not super applicable when it comes to Forex, right? And if you adapt it for Forex, you need to remove the gaps that happen there. But what I really love is the 3 black crows and 3 white soldiers. It is particularly good not only in calling reversals, like in this case, you can see price come up, a little bit sign of indecision, 3 black crows, bam, you should be expecting it to go down, right? Same thing here, and then you expect it to go up. It is also very good in breakouts, right? So like what I shared with you guys earlier, right? Let me see it over here. When you see a 3 white soldiers or 3 black crows that cross past a level of resistance or support, that is usually a very good sign of a breakout successfully happening. Okay, right. So the entry is after the third candle. Yes, you tend to look for the entry after the third candle, after the third soldier is created. Okay, now the last one I like is the 3 inside up and 3 inside down, right? Because this is one of the harder patterns to find, but if you can find this pattern, it's a very good pattern for reversals. 3 inside up and 3 inside down. Now, guys, I want to be very, very mindful of time, right? Because we have actually reached the 1 hour mark. We don't have time to cover the rest. I do not want to take away from what we're going to learn later, right? Because we actually have a session on combining candlestick patterns with what we learned, right? But instead of doing that, right, I'll include that in the next session where I show you how we combine candlestick patterns with additional with what we learned previously, right? So because I do not want to rush through, I actually want to take this period of time to actually ask you guys, right, what kind of questions, right, do you have for me now, so that I can at least address some of these questions before we look at what we learned previously. I got people asking if I'm going to drink whiskey later. Right? I'm drinking. I'm not sure if you guys know if this is water or vodka, right? So we got Wansa asking what indicators do you apply with your price action strategy, right? I can share with you what indicators I apply. When it comes to trading, I use the Fibonacci retracement, right? Let me see if I can show you an example of it. When it comes to trading, I will use a Fibonacci retracement, right? I will use a Fibonacci extension, right? I will use usually support and resistance, like maybe, support and resistance. In this case, I can see a big breakout level over here. I can see a big breakout level over here, right? I do use a little bit of trend lines where necessary, right? So sometimes I just look at trend lines to see if it's breaking any key levels. I do use trend lines. I do use channels too, right? I use, in terms of indicators, one of my favorite is the Ichimoku Cloud, right? So for the Ichimoku Cloud, what I do instead, right, is I will remove all the different stuff and I'll just leave the back, the cloud at the back, right, to give me an idea on the momentum of the charts, right? Those are a couple of things that I use when it comes to trading. At the same time, when I will use a stochastic, I'll use RSI, and I will tend to look for divergence, right? In this case, you can see on stochastic how there is, a nice little stuff here, and there's a nice, bearish divergence. Indicators going down, price is going up, right? And of course, if we just try to do a replay session and we see what happens over here, right? There is, I know this is retrospectively, so it's not entirely accurate on how I would trade this currency. But if I were to do my analysis on here, I would maybe do a 61.8 retracement. Price is testing a 61.8. It might be testing a 78.6. Let me check. Nope, it's a little bit far away from 78.6. Fibonacci extension, I will do it here. Price testing a nice 100% extension. For those of you guys who know Fibonacci extension, you're looking at the zigzag formation over here, right? This is the A, B, C, D formation. So price is testing the 100% extension. There is a nice bearish divergence, right? There is a nice, if you zoom in a little bit more, you can see that there is a nice candlestick formation. There's a shooting star formation, right? And there's a very nice gravestone. What the hell is it? Oh, sorry, not what the hell. I mean, dragonfly. Yeah, I think it's a gravestone. Yeah, very nice gravestone doji plus dragonfly, right? All when there's bearish divergence at 100% extension, right? Is there any swing high or swing low here, right? I will consider maybe this level as a resistance level, right? For those people who know how I did analysis previously. This is what I call an overlap resistance, right? If you attended my previous webinar session. So overlap resistance is 1, 100% extension is 2, right? Bearish divergence is 3, stochastic in an oversold zone is 4, right? Price action here, 5. So I got 5 reasons why price might reverse from here. So those are the things I look out for. And I know that, okay, this is a high probability trading setup I can look at where, you know, trades might work out in my favor, right? Now, okay, I got a lot of questions coming in, right? Gin and tonic is better for the heat. I agree. I finished 3 bottles of gin already, so I do need to stock up on that a little bit more. Yes, this is as applicable to stocks, right? Do I look at fundamentals? I usually look at the news to avoid the news, right? So what I like to do is I like to avoid the known unknowns, right? So if I see a big news event coming up, I will try to avoid it if I'm on the 1 hour or 4 hour on the 1 hour chart, right? What is the best candlestick indicator to indicate a reversal? Right, candlestick indicator, right? The forex army, you have a candlestick indicator, you can look at that, right? But if you're asking for candlestick pattern, right, I would say the morning and evening stars. Let me see. Oh shucks, where is that? Right, if you're looking for candlestick patterns for reversals, I like the morning and evening stars, and I love the tweezer bottoms and the tweezer tops. These to me are one of the best reversal patterns. Okay, now got another question coming in, right? Yes, you can watch this. Where can you watch this recording? Just go to icmarkets.com. So, you know, head over to IC Markets. Where do you want to go to? More? You want to go to webinars, right? Go to webinars, right? And you can see the different webinar recordings here, right? Are slides available somewhere? Nope, the slides are, you know, you can watch it in the video. Money management, do I use MACD? Hardly. Is the percentage based on Fibonacci? Yes. How do I use Fibonacci? I will teach you guys in the upcoming webinars. Be sure to look out for the IC Markets upcoming webinar sessions, because there will be webinar sessions. You know, if you want, drop a friendly drop a message to their support team and ask them when ask them for more webinar sessions, right? Right. Do I look at market structure? Yes, I do. Right, I do avoid the news. How many hours before the news do you stop trading? I actually only avoid the news 5 to 10 minutes before the news event. Right, is it good if the first candle in an engulfing has a lot of wick to show that it's fairly weak? No, it's not good, right? Fyodor is asking if the first candle in a candlestick pattern, right? Is it good if it is if there's a lot of wick over here, right? I don't prefer it that way, right? I prefer the first candle to be strong, the second candle to be strong too, right? If a counter setup appears, do you close your trade / move your stop loss, right? It depends how good the counter setup is, right? But usually you need to know when to place your take profit. You know, have a plan and trade the plan, right? And that'll be what we're covering later when we look at trade management, right? Am I always hosting the webinars by Christopher? Yes, I am, right? I hope you don't mind, right? That I'm the guy hosting webinars. Macs or Windows better for trading, right? I think no big preference, right? As long as you can trade on MT4, right? No big preference, right? How do you find entries for the bullish, bearish engulfing, right? You need to look at the charts closely for that. Okay. Now, with all these indicators set up, how high would you guess your edge or chance would be? So we got a guy asking, Vic asking like roughly in percent, like how high a probability will you be if we have something like this, right? We have 5 different elements lining up together. How high a probability is it that you'll be getting this trade correct? I say at least 70 to 80%, based roughly on experience. Now remember, how many times you get a trade correct is not as important as also knowing your risk reward. What I mean by that is that sometimes, right, sometimes we have Tell me which trader is more profitable. Okay, tell me which traders is more profitable. I'm going to ask it to you here. Okay, I'm going to erase this first. Right, tell me which trader is more profitable. Is it a trader who is 90% of the time he has a 90% hit rate? So each time he gets it correct, he gets 1 pip of profit, 1 pip TP. Each time he gets it wrong, he gets a 10 pip stop loss, right? Or maybe another guy who is only correct 10% of his time. Each time he's correct, he gets 100 pips of TP. Each time he's wrong, he loses 10 pips. Which trader is more profitable, trader 1 or trader 2? I'm seeing a lot of people. Yes, Shem, I do. Yeah, I do tend to try to look at a little bit of the analysis on Trading View before I do it, right? We got Audrey saying it's option 1. We got Omega saying it's option 1. We got quite a number of people saying it's option 1, right? Wrong. It's option 2. You don't just look at the number of times someone is correct. I can be correct, and each time I get it correct, I get 1 pip. But each time I lose 10 pips. So my expectancy here is negative, right? Trader 1 is a bad trader. Trader 2, however, is a good trader. Each time he gets it correct, he gets 100 pips. Each time he gets it wrong, he loses 10 pips only, right? So trader 2 is actually a better trader, right? So that's the important thing. Don't just look at how accurate a trading setup is, because you need to see how big the profit targets is and how big the stop losses are too, right? So that's the important thing to consider when you're looking at a trading strategy. What is the profit factor, right? What is your average win? What's your average loss, right? Guys, those are very, very important things to consider, right? How many years have you been doing Forex now? I say about 8 or 9 years, right? Now risk management is king. Yeah, this answer really make me really think. All right, no problem, Vic, right? Okay, guys, now I want to be super mindful of time, right? I want to be super mindful of time, but because we have actually crossed the 1 hour mark, 1 hour 10 minutes, I just want to ask you guys a couple of questions to get a better kind of feedback, right? So if you guys can just help me, right? Do a rating from 1 to 5. Don't worry, right? So anywhere from 1 to 5. The 1 being terrible and 5 being great. Don't worry if you rate 1, I will not hunt you down and kill you. I might, but I won't say. I might not do that. But just share with me 1 to 5 how you found my webinar, and let me know one thing you like about it or one thing which can be improved, because I'll be your host for a long time to come, and I want to find ways that I can constantly improve the webinar and try to help you do better, right? I can see people saying that right, you like the interactive thing, right? Thank you very much, right? Maybe a slightly longer time, I will try, right? I'll try, because usually most of the webinars, right, tend to cut off about 45 minutes or 50 minutes. Webinars need to be longer. In the future, we have a VIP research portal, a live trading room for IC markets, where you guys will be able to join me after the webinar. It'll be an awesome place where you can practice trading with me. All right, thank you very, very much. I can see time management. Okay, I got it, Christopher. Right, I'll do my best to try to I'll try to manage my time management more. Thank you guys. You sharing knowledge is awesome, right? Most of you guys read up 4 or 5. That's great for me, right? I can see a lot of you guys asking for more for a longer time. I just need to ask you guys one last question, which is again, for those who attended previously, right? Because we compile these answers every single time, right? So that I can get a better gauge of the what you guys feel. How many times in a month would be the ideal amount of webinars for you? 1 time, 2 time, 3 time, 4 time, 8 times, right? Okay, I can see twice a month, 4 to 8 times, twice, 2 to 4 times, once a week. 4 times at least would be better. So okay, I can see a lot of you guys are saying once a week seems to be the sweet spot. As much time as you have as you can give, right? Awesome stuff. 2 to 4 times a month, All right, one live session. All right, yeah, we have more live sessions coming up where I actually show you guys how I trade live together. We look at the markets together, and it's gonna be super fun stuff there, right? So okay, weekends not in live trading session. Always doing work now. Okay, awesome. Now okay, it's 1 hour long. Now good price action. Thank you very much, guys. Okay, Michael, I got that. I got that. We will look at trade management in trading strategy session coming up. So be sure to look at the IC markets webinars, right? Because a lot of you guys wanted to enter, but then the webinar is full, so they didn't manage to enter. So be sure to tune in early on the next webinar. It's going to be an awesome session. If I'm not wrong, we're going to touch a little bit on Fibonacci, if I'm not wrong, right? We're gonna touch on Fibonacci, awesome session, right? Or we might touch a little bit on oscillators, might be Fibonacci, okay? So thank you very much for your time, guys. Thank you for tuning in. Thank you for hanging out all the way with me, right? Have a good, today's a Tuesday, so it's start of week, yeah. So have a good session in trading, right? It's nice to see so many familiar faces here, right? It's nice to see you guys coming back, right? We're gonna be on a nice journey together. I'm gonna teach you guys how to trade properly, how to trade like institutional traders, right? And you'll be, yeah, I'm looking forward to this awesome journey with you guys, right? And if it's not too, early for you guys there, you can have a nice cup of whiskey, right? I still got a long day to go. I need to go exercise, right? So I won't be drinking anytime too soon, right? Yes, I can see Alan. I'll enjoy my whiskey. Maybe later tonight, right? Okay, guys, take care. Cheers and peace out, right? Peace out. Bye bye.